Hello, hello. What's going on?
Yo, what's up?
Oh, just a little 5.5 cent hex pump is all.
Yeah, congratulations to everybody, finally, right?
Welcome in everybody in the chat. Appreciate everybody for showing up this morning for the day one, episode one of technical analysis with HANSHEX and myself. Ready to kick this off. I had Hans put together a list of different indicators and charts we're going to look at this morning. So yeah, I'm pretty excited to get into it. And this is my first time actually streaming with Hans. He's streaming all the way from South Africa, and just want to tell him that I appreciate all the good work he's been doing on Twitter with the TA since the bear market started. I mean, he's been in the game a long time, and he called a lot of the good bullish divergences on the charts, and they always seem to play out. So, I feel honored and privileged to be here with you today, my dude, and appreciate it, and welcome in.
Well, thank you for having me. I mean, that bullish divergence on the weekly, I've been looking at it for a while, and finally, it's actually played out now. So,
Yeah,
and
it's
thanks to everybody who's been supporting me. It's been slow, like everybody know, in the bear market, but finally, things are starting to heat up a little bit. So,
yeah, we're seeing it on like the chart side. We're also seeing it on the liquidity. So just to pull up the hex chart quick before we really get rolling. A couple things to note here. The hex chart is priced right around the edge of a liquidity wall. So you can see here in blue, for those guys that have been following me for a while now, we've been tracking this liquidity since last summer in June. And this constantly changes, but this is the most bullish we've seen the liquidity setup in, gosh, I want to say like May of 2022 or April. And when we went back here and we tried to test this 20 cent level. So if you ask me, and this is just an opinion, no financial advice here, but we're going to the frickin' moon, guys. So cheers to that.
yeah, I always wonder if the whales are actually watching this liquidity, or if they're working together and synchronizing their buys.
Yeah.
Because I
I
mean,
think I think you're onto something there. There's a lot of evidence on chain that and your friend Sami on Twitter, if you know at your friend Sami, he has made light
yeah,
of this in his most recent video, which was basically that
mhm.
there was a whale sweep in here. And I can tell you that there was coordinating selling on the way down between a few, like 4 or 5 accounts, and there is a coordinated buying on the way up. The issue that we have from the seller angle is that the sellers are completely out of funds, and they've now been left behind by this rapid price movement up. And now you have this thick bar of liquidity here where it's protecting price now and acting as support. And the reason why is because of there's not a lot left. So if we pull up the liquidity pool here, this is the USDC liquidity pool. You can see there's only 27 million hex in the pool currently, and now $7.7 million of USDC. So for some perspective on that, during the bear market, when we were down here around this like 2.5 cent level, this pool had at one point 350 million
Yeah.
hex in the pool.
Mhm.
Okay. And then this USDC value got down as low as like 2.2, 2.1 million. And I think even at the very bottom, I think it was around 1.2 million USDC. This has gone up by a factor of 7. So this is giving the market, it's a liquidity
It was
injection to the
literally a
max.
million like a few days ago.
Mm. And so what this is doing is the ratios of hex to USDC is now more balanced. And so what that means is that the price, even though that the ratios are more balanced now, there's become a massive shortage of hex in the pools, which makes hex easier to move from the USDC side. So on the liquidity here, when this pink line goes left, that means that the price can go up. The thicker the bands, the more muddy the waters, the harder it is to move price through. But when you're talking about a pool with only 2 to 3 million bucks in it a few days ago, it only took 2 or 3 million bucks to effectively double the price. Granted there was no sellers. However, we've had people exiting, and now they exit above in the lower liquidity zones, and then the price moves back into the thicker zones, and that allows whales or new buyers to come in and accumulate this very quickly decreasing pool of hex. or low
Remember, those
slippage.
guys that are behind the price now with those liquidity pools are actually, I've seen it myself, pulling liquidity and buying up the price even further as they're chasing the price, feeling they've been left behind.
Yes. Yep. And so if we pull up the 15-minute chart, for example, we can show you how this played out. This was an opportunity here where on February 3rd, on the 15-minute chart here, the HEX price got bought up by probably one or two players, and then one player sold for a $27,000 profit, and the price just didn't have any other sellers left to hurt the price. Now, when you look at this chart here on the right, I know it's fuzzy and you can't really see, but there's been 613 buys to 541 sells. There's $1 million more of buy volume than sell volume. And so here's some alpha for you. The reason why the price can go up on only $1 million more buy volume than sell volume is because of this very fact right here in the TVL. This is the long-term total value locked in all of the HEX pools. Okay. So I'm going to take this chart out and I'm going to draw it out on a chart so you can actually see the relationship that I'm trying to show for you. Oops. So if I take this chart and I post it out on here and I draw for you what has been a massive 500-day liquidity squeeze on liquidity, what we had most recently was a break above that pink line. Okay. Now, to take it to another level and tell you guys something that you might not know. By the way, if you guys are interested in some deep dive analysis and getting this information like months earlier, go check out my website, axisALiVE.com, where I provide daily, weekly updates, chart set updates, and all of this deep dive information. So you can be on the cutting edge of this information, okay? So back here in price, HEX traded between, let's see, when was that? It would have been May of 2021. So if you go to the HEX chart and you see where price was in May of 2021, we were around 5 cents. Oh, interesting. We were right around 5 cents with the same liquidity, slightly less. Okay. So over this whole time frame, we're back to where we were in May of 2021, almost 2 years ago. Okay. So then you had this like slow chop of liquidity being HEX liquidity being pulled out of the system and USDC being put into the system and ETH being put into the system. Okay. So more USDC, more ETH coming in, more HEX coming out. The net was that the TVL stayed the same for many, many months. This is called stasis. This is when organic parabolic growth can occur, is when liquidity goes sideways on the TVL, but the price is going up. So this was May of 2021. This was August of 2021. So if you go look at the chart and you go out to August of 2021, the price had already reached a price at the end of August. The price was up to 22 cents. So even though the price started at May at 5 cents and in August it was at 22 cents, the TVL and the pools, the total value locked, stayed roughly the same. It was about $6 million total dollars. So what I'm trying to tell you guys is HEX liquidity is being siphoned out. New buyers are coming in and having to accumulate an increasingly rare object. Okay. This is the De Beers moment for HEX. So if I go back to my analysis here, this zone here is what you want to see because we can get to all-time high prices just by doing this kind of a move again. Okay. So if like the TVL just kind of chops sideways, this is going to mean that increasingly more and more HEX is being taken away. And that HEX number is going to get down into like the single digit millions, while there's millions and millions of USDC being put into the pools. And then what we're looking for is when the trend totally breaks away and you get this parabolic run. And this is what true virality and FOMO is. This would happen to occur on a documentary launch, a pulse chain launch, true just virality through TikTok, or somebody big makes a video that gets people to understand how to buy HEX more easily. There's a lot of things that can happen to make this move happen, but the longer you get this move, the more the price can go up. Because remember, it went from 5 cents to 22 cents in about 4 months at this time frame. So if we project that out on the HEX chart now, what do we got for TVL right now? We got about 12 million, so double what we had back here. So we could assume that we'll go from, like back here, we went from like 3 million to 6 million, we doubled. So let's say we go from 12 million to 24 million in the pools, and this just trends up, something like that. Maybe something like this. We get to this resistance level here, and then maybe that's when real FOMO happens and we have big accounts just take the price to crazy high prices. You know? So like, why do I think that? Well, I just did a hit piece on this on my blog, basically describing how this type of move in Bitcoin could happen again. Like this was what Bitcoin did in the early days, where it just went vertical because there's
I've
just
seen this chart.
there's just nothing left, you know, in the pools. This is when Bitcoin inflated the most, but it was the rarest. Okay, so if you understand the round of inflation that's coming out right now, it'll more easily make you understand why the price is going to rocket up. I already showed you how there's only 12 million hex left in the USDC pool. Right now it's 27 million hex. Okay. And then the other biggest pool is the hex ETH pair. So if we go to the hex ETH pair, what do we got? 6 million. So combined, you have like 32 million hex, and you're on the
So
edge of a liquidity lift.
if you check out the Dex screener chart, you can see at the bottom, you can see the pooled USDC. You can see the liquidity at the top right there, 10.5 million. You see at the bottom right here, pooled USDC, 7.9 million.
7.9. Yep.
So 8 out of the 10 is buy support, right?
Yeah.
It just shows you how much is sitting here waiting.
It's crazy. And so to take it another step further again, and I know I'm moving quickly because I want to get to the actual indicators and show you guys what's going on from a technicals level, but if Hex was to really go viral and go vertical, do you understand how quickly the price can get back to 20 and 30 and 40 cents? Like there's already a shortage of coins, and now the gas pedal's on, and there's no one's letting off the gas, and everybody's down now and got left behind that thought we were going to get penny hex or 0.7 of a cent. And this will all become very clear when we look at the hex Bitcoin pair and the hex ETH pair. All right. So you want to bring up some charts, and then we can look at some indicators?
Yeah, let's do it.
Okay, cool. Yeah, so we'll probably start with, you know, just simple RSI, stochastic, the MFI. You know, I don't actually know how to read the I don't even think I've ever used the MFI, so you could teach me.
Yeah, so the MFI is a combination between the RSI and the volume. So I don't know the math behind it. I got this from Pulse Lord. Should I pull up?
Yeah, you can pull up. You can pull it up for sure.
Present.
I want to just since I got this on accident. The DMI had a bullish cross on the weekly, which we haven't been above the red line. The green line has not been above the red line since.
That's the weekly chart, right?
Not in a on a weekly, not in a meaningful way since February of 2022, back when Hadron launched, ironically. So we were about 28 to 25 cents during this time. Well, we haven't been in a bullish position on the DMI against USDC since then. So it's been 1 year, you guys, 1 year of sellers controlling the market. Now that has flipped with a bullish cross. And what Hans is about to show you here is the RSI, and how we're clearing new levels. So here we go.
Okay, so yeah, I'll start on the weekly. Is that my... Okay, so I see it's only streaming one of my tabs. What happens if I shift to another tab? It doesn't change.
Okay. When you present,
yeah,
just present the whole window instead of like you have to. I think you must have chosen to share a tab, which is easy to switch. You just switch to share window. While you're getting that up, I'll just pull up my RSI monitor here, so you can see
entire
here, guys.
Screen. Okay, I get it. Sweet. Okay, there we go.
Here we go. He's coming.
Do you want to start? Let me just hide the Ishimoku for now. So this is the weekly chart. I've got the RSI, the stochastic, and the MFI. So if you guys have been watching me, we've been talking about this bullish divergence for a while, right? So price was going down, yet we had momentum that was going to the upside, and this finally breaks when you break the higher high over here, and that has now happened and it's played out. So that's good to see. I mean, the stochastic, this isn't the full chart. Maybe I should quickly yeah, so here is the stochastic RSI. The last time we've been this high, excuse the Wyckoff distribution there, it was actually at the all-time high back here, the stochastic. Now, this hasn't turned yet on the stochastic. Unfortunately, we do have bearish divergences, but just like this divergence down here took literally months to play out. I mean, this can stay up here for quite a while. So we've got this bearish divergence here. Prices, or the momentum's going higher, yet the price is going lower. But this move is quite powerful, so we can actually see us break this 7 cents. That would be very important for us to disqualify this bearish divergence over here. The same as the MFI, the same as the stochastic, all of them have bearish divergences, but it's understandable this move has been pretty strong, right? So yeah, I mean, on the dailies, there's no divergences on the dailies. It looks incredibly well. Maybe a little bit, but these haven't played out yet. So on the MFI, this is going lower, but for this to play out, it needs to break below this level over here. But that hasn't been confirmed yet. Price can still go higher, more volume can come in, and that could just disqualify it pretty much within today. So divergences here as well on the RSI. Oh, that's the stochastic. Now the RSI doesn't have any divergences, which is good to see. We haven't been this overbought in quite a while, right? But we've broken all of those levels except for the... So we were a little bit higher back here when we last tested, and we've actually broken above that now. So yeah, that looks good.
My gut reaction when I look at this on the stochastic is when we're on a massive trend reversal like this, and so much of the market sentiment is flipping on its head, we almost have to go out and look at the weekly stochastic to get a better picture of the overall.
It's
movement.
already turned up bullish again, right? So it does look at it like it has. It can go up a little higher.
Okay.
Yeah. So
like
I mean,
you said,
this
the RSI
even
has confluence with that same principle.
Yeah.
Like they're both,
we haven't
vertical.
even turned bearish here on the stochastic, right?
Yep.
Okay, yeah. So those are the divergences that I was seeing. I don't think we need to go down to the 4 hours lower, do we?
I think this is kind of showing you the picture. Like we're at all-time highs on the stochastic on this chart.
So at this 3.3 cents, I went live and showed you guys the Ishimoku cloud. Now, these are the settings here if you guys want to use it yourselves. But the important one to see is this lagging span. It's pretty much the price action, but it's, let me just see, I think it's 60, 30 candles behind the price action. So when this is above the price, this is bullish, right? And this is the weekly chart. This base or the conversion line, which is the blue line, this is the sum of the lowest price and the highest price divided by 2. So it's taking in the 7.5 and the 1.7 down here, adding it together and dividing it by 2. This gives you this 4.5. We are now above it, and it moved last week when we started pumping. So we got a little bit of rejection, but we're now above this. Now this is going to act as good support, right, at 4.5 cents. Very powerful support. I mean, when these lines are split like this, the base and the conversion, this wants to revert back to the mean. I mean, so the mean is like pretty much at, what's the difference here? 18 and 45, like right at 11 or 12 cent area.
Okay, gotcha.
So on the daily, I mean, it's super bullish. We're through the cloud. The cloud is just resistance, and now it's acting as support. It's sitting at 3.3 cents. It's going to be very powerful support. The thinner these two lines are, the stronger the trend is to the upside. This, now I know we're not traders, but this lagging span, when it gets into the price, this is like an early indication that it's time to close your longs. It's just a good indication of what might be happening in the future. These haven't crossed bearish yet, the two lines. They crossed back down when this closed at 3 cents. So this was a perfect indication for you to go long on this. Yeah, I mean, that's pretty much everything. There's nothing bearish here at all. If you go to the 4 hour, I know it's getting like into the weeds now. Everything's still bullish. This lagging span hasn't caught up with the price yet, getting you out of the trade. There's still lots of support here. It's thin, it's moving up, and the base and the conversion haven't crossed yet. So, I mean, everything's pretty bullish, right?
Cool.
We can, if you want to share something, we can then move on to the Wyckoff maybe.
Okay. See what do I got? Yeah, I got the Wyckoff up somewhere here. Let's see. I think I had it on this chart. Yes. So this is the Wyckoff distribution pattern, and I think like a lot of people were playing this distribution pattern on Bitcoin at the top for the double top. How it was like a long-term distribution pattern. Well, what I decided to do was bring this in on like on the hex pattern for a bottom. I think I might have got this idea from you, somebody on
That
Twitter.
looks perfect.
And you see how
I
the
shared it back. I thought the spring was when we got that massive sell off, that massive wick on the chart in November. I shared it, but
Okay. Okay.
I was a little bit early.
Yeah. Okay. Then I just figured like, well, so if this is like generally, kind of what's occurring here, you can see that it almost matches pound for pound.
Yeah.
And that we actually, so in crypto land, a lot of times smart whales, smart money will let dumb money sell the bottom. And that's kind of what we had was overperformance to the downside in the same way we had overperformance to the upside on Hex. For example, if I pull up, let's see here, the Coin Paprika chart, that's one's
pretty much liquidity for them to go long. Because if that does not happen, they're not getting into position.
Like this price action here on Hex was technically like insane overperformance. And so then this in the same way was insane overperformance to the downside.
Mm.
If you're just trying to track the mean, which would be like this, like basic price. And this is where Hex price wants to get to, is the mean price. Now that's just, drawn quickly and roughly, but yeah, maybe it's something like this. And this is basically a magnet up here trying to pull X price up to it. And a lot of that is because smart whales let dumb whales sell and exit their positions below this level. And now that level's gone forever. And you know when else that happened? Right here, back in the chart. This was back in before we had our big run up. So I actually kind of think these moves are similar. And so this was like, I think 0.6 of a cent. We tried to break out here, failed, went back down, created that like support right here where like the last of the sellers tried to sell out, and it was marked by a big wick. So if I go back here, you get big wicks when this stuff happens. So whenever you see wicks that's like abnormally larger than the price action around it, that's marks like key inflection points in the chart. You had one here to the upside, so it happens in both directions. And so the reason why I was able to call the bottom so confidently was, and a lot of us did, was because of this guy that sold 150 million in one button press, and the price was back at the same price within 15 to 20 minutes. That was like, to me, marked the bottom because that was the largest volume candle that we actually got.
And it perfectly retested that little W there. That's what's called a sign of strength right there.
Oh, okay.
It tested that little breakout. You see the little W just to the left of it?
This one here?
A little bit more left. You see that little W? Yeah, just like that.
Yeah. And this is the same type of W. Like if I go in on a 4 hour, you can really see it clearly. This is your W pattern,
Yeah.
And so this is the same pattern that we got back here in Big Payday when we went from the bottom all the way up to the like that. And percentage wise, from the wick low to the wick high, that was a 600% move. So if it's any indication what this thing can do from past performance, is a 600% move off that low, which would get you roughly around that 12-cent range, right? But we're playing with some big resistances along the way, and so you got to be cognizant of like, okay, what's the bearish moves that could occur? And so one of the ways we look at that is basically you look at, I basically did a Fibonacci retracement level, from the all-time high down to the all-time low. And like, so we're coming into the 3.8 or 0.382 fib level here. And that's basically acting like a magnet now, pulling, because we have such strong support below price between, let's see what our liquidity says, between 4.8 and 4.3. So on the chart, that registers as roughly 4.3, 4.8, and this can be an accumulation range for the price. So any action here in the next 2 weeks is bullish as long as you hold above 4.3. And the issue that the sellers have is that who's willing to unload hundreds of millions at a clip and risk getting left behind when we're coming in to test this major downtrend resistance for the first time in how many days has it been? It'll be 300 days since we've tested it last time. So a break
So
above
that,
this, yeah.
excuse me, that's the 50% level. It's not a fib level. That's a GAN 50% level. So this GAN rule states that when the market breaks one angle, it moves to the other one. Another way to determine the support and resistance is to combine angles and horizontal lines. For example, often a downtrending GAN angle will cross the 50% level. So as soon as that downtrend breaks, I won't be surprised if we see the 50%.
And then because of and so to support that claim as a function of low liquidity and the unique low liquidity and completely DEX traded asset in Hex, it will even likely hit that target quickly and then overperform.
Yeah, all the way to the 61.8. No,
all the way to there.
Bitcoin did exactly that during that Ponzi, the one token Ponzi, right?
Yep. So if, let's see.
Exactly to the
This is
61.8.
probably
at
a great
1410.
time to pull up the Bitcoin chart and kind of give our hot takes on what's going on with Bitcoin, because like I can prove to you right now that Hex is decorrelated away from the rest of the market. Just to kind of tell you that whatever Bitcoin and ETH want to do, it's not going to really affect Hex. Like on this correlations matrix over over a year, we had a 55% of the time we did the same thing as Bitcoin, and 63% of the time we did the same as Ethereum. But on the 30-day, only 8% of the time are we doing what Bitcoin's doing.
Last time, Hex peaked way later than all of the other altcoins, because I remember I trade the altcoins. I call it the little old lady strategy. It's from Brian Beamish and Da Vinci Jeremy, and I traded that all throughout 2018 and 2019 and put my whole portfolio into Hex, and then Hex overperformed as well. So like although all of the altcoins did, and we can see it now as well after the AI hype and things, once again Hex did it afterwards, decorrelating from the rest of the market.
And you know, if we go back in history here, and just to prove what Hans is saying, is basically this is where this period here in Bitcoin's history, price was between 40 and 45 grand. This is when Hex topped. Hex topped here. And then, you know, looking backwards, we could say that, well, maybe because Hex topped early for the markets, maybe it will lead out of the out of the bear market early as well. And so now that we've decorrelated away from the rest of the market, Bitcoin's kind of went sideways now for almost 20 days, you know, and Hex is just going vertical. And so it's showing decorrelation. Its first move, even though it lagged to start the trend here, now it's way overperforming and it's decorrelated away. So now I tend to think that it's going to go to the beat of its own drum and just continue to move up regardless of what Bitcoin does. That function of that low liquidity. What I see in Bitcoin right now, and you tell me what you think about this, is two scenarios can play out here. The first scenario is more like the 2019 bear market, which basically took us from 3.2K on Bitcoin all the way up to 8K at this level here. And if you're measuring relative distance, and then Bitcoin chopped sideways and then broke down into here and then ended up going up like this all the way to 14K, did a 2x off that level. So if we do that kind of a play on this, I mean, price will effectively go up to
48,500, right up to the 61.8.
Correct. Yep.
And we just make sure it's not on the log scale. Yeah.
Yep. And then the other one was, we can actually, I'll have you pull up yours in a second. I just have one more point to make, which was that if we get more like DeFi summer, the 12K top, Bitcoin would come up top here and then basically start a head and shoulders pattern and then just break all the way down into this zone and then build out like this. And then eventually you'd get out, but this would be a 30 days of downs and sideways action.
That would look a
before-
lot like the 2015 bear market. Is that what you said? Eh?
Yes, yeah, I would agree
Yeah.
with that. This was the DeFi summer top, but let me show you what exactly what I mean.
But all of these are fractals anyway.
Correct. So then it doesn't have to do the same thing twice. But so this is like something that from one of my private chart sets. I'll show you guys. Basically, these are the fractals when you overlay them on the 4-hour chart for Bitcoin, and this is exactly how Bitcoin got out of downtrends before. So the yellow line is the 12K distribution top on DeFi summer, and the white line was the bear market rally on the Ponzi, on that plus token Ponzi scheme thing, where the price went from
Into the virus dump. Okay, I know. Okay, I see where you're at now.
Well, the virus dump actually happened before the yellow back here. So let me show you because I want you to know exactly what I'm seeing here. Let's see here. Basically, if you take this here was what you're talking about. This is the fractal that I'm looking at in yellow. So you take this, basically price recovered. See how it went in a nice clean parabola?
Yeah. Okay. Yeah. DeFi summer was HEX rallied as well.
And we'll just, and this is just a fractal, so it's just a rough estimate. But basically, if you got that clean parabola in the same way this time, then I just tried to match my levels here. You know, something like this.
It does look a lot like it because we've now broken that parabola as you've shown there.
Yeah. And so this looks like a head and shoulders on Bitcoin. There's no reason why Bitcoin can't break down, try to chop back up, fail. And then this is like last call before max pain to the upside, which would get you up to that 30K range roughly.
Yeah, when I look at the HEX versus ETH and HEX versus Bitcoin chart, ETH looks a lot more powerful than Bitcoin currently does, which makes me believe that actually that might be in the place because.
So here's Hex ETH weekly.
Yeah, so it looks a lot the same, but if you look at the indicators, you can see that ETH is incredibly oversold, the ETH pair, whereas the Bitcoin pair definitely has more room to go, which could just mean HEX overperforming or Bitcoin going down in value.
Correct. So if we do indeed get that breakdown like DeFi summer on Bitcoin, on the 4-hour here, then I anticipate, because Hex already decided to decorrelate from the rest of the market, that during this crash on Bitcoin, that Hex is going to hold its levels. And what that looks like on the 15-minute for Hex is something like this, where now that we've had this nice run and tested the 3618 on the most recent fib extension, maybe we get some sideways price action now. And maybe there'll be a test to create our own head and shoulders. But either way, even if it holds the 4.3 cent range, right, from our liquidity bands, we're still way better off. And so it's just a matter of time and holding levels when Bitcoin's falling effectively.
That 382 is from the 7 cent top, right, on X.
Yeah, so I'll show you exactly where it is so we know. So you can see what I'm seeing.
We tested it perfectly. I do mine in the reverse, so that's the 61.8.
So this is what I did.
But
And you tell me if I'm using this tool wrong, because this you can help me with this. So if I took the bottom and I measured to the first peak to the first major sell-off when that guy sold 150 million. Basically. So this is like the extension that I wanted to see.
You can move it a little bit more right to do that.
Here?
No, the bottom part.
Oh.
Put it back there.
I got you.
The bottom part to
here?
the wick. To the wick, yeah.
Got you. So we overperformed. So we perfectly tapped. Yeah.
Yeah. So that is that's called your chaos theory. It can go as high as the 4.669, which what are we currently at?
Yeah, dude, that's my target.
So
your 4.618 right here, which would basically get you up to the 6.7 cent level, which would test that this level here.
Yeah,
roughly.
It's probably the 88.6 right there. So we've got a little bit of confluence right there.
Okay. So all this things to me is saying that this is time for Hex to consolidate on this huge volume bar that just came in, and then we'll create some like sideways action here. and then it'll be a chance for last second buyers to buy back in, and then we'll go test in the next week or two. Remember, the giant like 4 billion hex stake comes out this day right here.
So that's going to ratchet up the share price nicely.
So it'll ratchet up the share price, and it'll give your big hex, your big changes in share rate is your indicator in a bull run of when price moves may occur. So in this case, let's pull up the share rate chart so people can visually see what we're seeing. This major share rate increase here is what we're looking at. This is coming on February 14th. The share rate's going to go from
And it's the
25,000.
Godwell, or
I think it
is
is,
the
but
LA?
we don't know for sure. So I've actually inquired with Crispy Man about this, and we're not for sure if it's the Godwell or not. But it's a large player in the system that did this 45-day stake. So the T-shirt rate will go from 25,825 to 26,452, which is about a 660 hex increase. And so I actually did a blog post about this, describing what this effect will have on the share rate, as well as I spoke about this in my most recent episode of Pure Alpha with Crypto Sloth and Crypto Kool-Aid. Both of them are in crypto, but they both spell crypto two different ways. How about that? But I'll just show you guys kind of, this is my website. This is what I do on my blogs. These are free. You just have to sign up for a membership for free, and then you can view this. But inside of here, I detailed how X liquidity was like dropping off a cliff while new Ethereum was coming and getting injected in, and new USDC was getting injected in. And this was as of the 5th. So this data is now, getting older. However, I detailed here how, well, we assume it's the Godwell end stake, but we're not for sure. This end stake is going to ratchet up share price by about 660 coins. So the effect that has on the system is that with every price doubling, his effective share rate he can increase the share rate in dollar terms. First 27% if the price stayed flat at 3.8 cents, but we're already at 5.5 cent high. Now we're at 5 cents. So he's already increased the price by like 20% I'm sorry, the market price has increased by 25%. So every time that the price doubles, and every time he ends a stake that for 45 days with that same amount of hex, he ratchets the share price up another $273 every 45 days. But that compounds against the increasing price. So if the price doubles, that every time he does it, it's a $500 increase in share price. And if on another double, it's a $1,000 increase in share price. And then on another double, 2,100, and then 4,300. So you can see the effect of the compounding of the share rate against the user's,
The price,
which is going to pull out the new inflation coming into the system. Okay, which means that that's going to be less dollars that could be sold on a monthly basis by the bow wave. The bow wave is basically the stakers that stake every 30 to 45 days. So the amount of inflation coming out in dollar terms is going to be less and less and less due to the function of the ratcheting of the share rate. If you want to know more about this, go ahead and dig right into this article here on axisALiVE.com. All right, I think I'm going to pull up your screen, Hans.
Let's quickly look at, maybe we should do the accumulation for, have you seen this before? The time analysis on Bitcoin.
Show me.
So we've got the past halvenings on here. Then I just use the Fib time zone and then pull it from the first halvening to the second one. This kind of shows you where the accumulation zone is between the golden ratio, the 61.8 and the 78.6 level. If we do that again for the second cycle, you can see once again it marked the bottom almost perfectly, the 61.8. Once again, you get your accumulation zone. Now this overperformed, obviously, but still pretty good buy areas. The next halvening is March 2024, from March all the way to May. So let's plot it at May. So between May and March. Right, so this just shows you we are pretty much timing-wise. And Gans stated also when the time is up, the price will reverse. So time is incredibly important. This is also why Richard Hart took the time also in his analysis. So we've got a few more months left. And I mean, this is looking a lot like 2015's accumulation zone. I mean, you can paste retracement zones on top of this, or we should do it from here. But this is looking a little bit weird because this is on the log scale. And this
I'm seeing
tends
all
to...
this. This is super good confluence of ideas here, for sure.
Yeah, this is showing you between the... So the reload zone or the accumulation zone, the golden zone, whatever you like to call it, this is between the 61.8 and the 78.6 level. Now, Bitcoin does get below the 78.6 levels in previous times. Now, if we just do that again from the bottom, this will again show you perfectly this area where Bitcoin bottomed out in the previous cycle. And I mean, that just continues. So there is a little bit more time left for this accumulation. I mean, unless we get that blow off top that we got back here. And just to go back to what we were saying, look here, hey, Bitcoin came all the way up to the 61.8. Right there. Pretty much the 14K.
Yeah. It's like a magnet up there trying to pull price up. Once you get above that median line, like once you broke 8K, or let's see, it was like 5 and then 8K. Once 8K held the support, that's basically what you're looking. It doesn't, and because of the nature of the low liquidity in crypto as a whole, it just, when these levels hold for a week or two in crypto, that's a long, long time.
So this is what we were talking about when we said the 48K target. If this is to repeat again this cycle. People are speculating which fractal we're in, but so yeah, there's a few opinions on that.
Yeah, my opinion is that we're actually going to play out more like 2015.
So
I don't think we'll get that massive rip, but I do see the mid 30,000s as a potential target.
So BTC versus HEX, I mean, we've broken above on the weekly, on the Ishimoku, all of that is very bullish. Let's just pull up RSI here.
Would you say that this is probably one of the most important chart in HEX?
Yeah. Back in 2018, everybody used Bitcoin as leverage for their altcoin plays. So they would trade the altcoin versus BTC, right? Whichever one it was, right? I mean, we've broken pretty much all of these downtrends now, even on the log scale. Oh, we're battling with it now, with this downtrend here. We just put that, well, we're just peaking above it now. So there was no bullish divergences here as we had on the USDC chart, right? We do have bearish, this is not bearish divergence at all. So this is pretty good. This weekly chart looks good. Yeah, so I agree with you. This is probably the most important, as people were using the altcoins as leverage plays to get more BTC, right? If we look at the X versus ETH, there was no bearish divergences or bullish divergences here. Just checking if this, so we have bearish divergence on see on Bitcoin, there's no bearish divergence, yet on ETH there is bearish divergence from here. So this is what I'm saying. The ETH pair looks a lot weaker. That's relatively speaking, right? Because this is a very powerful move than the BTC pair. This is HEX versus Hedron. So we can see here, let me just remove this, that this is the Fibonacci retracement tool from the top to the bottom. And we can see how, because this is where value is at, right? For Hedron versus HEX. This is where the professionals start laddering in their positions. So they'll have a small percentage here, another one here, and another one at the 88.6 level. And then just ladder in their positions. And we can see HEX has been outperforming its derivatives quite powerfully. I mean, we can even
The
measure this.
way I've been explaining that to people is that basically once Hedron topped, Hedron and Icosa have been sitting in the back seat now, and Hex is now driving the car. So if Hex
Yeah.
goes up, the derivatives will chase, and they can overperform. They don't have to, but they can. But what's been happening is they're basically staying flat against Hex.
Yeah.
Hex is so
X
powerful
is
right now.
outperforming.
Correct. And so what we're waiting for is that inflection point where Hex goes so hard against it that the Hedron Hex pair, Hedron breaks down against Hex and falls back into the professional zone where they looking to buy. And
Yeah, this
what
is the accumulation zone. This is where Hedron has value versus Hex. Generally up here in the nosebleed section, this is the area above the reload zone, is where you have all the hype, right? I don't see many people. Obviously, you in Crypto Sloth, which are dedicated to this ecosystem, do talk about it. But I mean, this is incredibly valuable. There's lots of people who have been waiting for this, right? Now there is this massive M here, and you have a measured move all the way down here, and this is also the Wyckoff check. This wasn't the most beautiful W. I mean, we can see prices as low as these versus Hedron, but that does not mean Hedron needs to go down in value. That's just showing that Hex definitely has more overperformance. But just to round that off, this is definitely where value is at for Hedron versus Hex. And if you look at Icosa versus Hex, it's pretty much the same story. We don't have that much data, right? I don't know. Do you know if this wick down here was actually price action?
I just call that an anomaly, and I don't even apply it to the
You
chart.
don't use it, no. So that's going to make it a little bit difficult, because otherwise you'd have to use that as well up there. Pretty much,
Yeah,
as you can see,
I think the
this is
best
very
way to
quick versus X, right?
yeah.
Very
So it
cheap
broke
versus
down against Hex hard.
Yeah.
And actually, this reminds me, if you look at the Hedron Hex pair and you go back to that nasty W, that looks like the same formation where you came back down and tested the lows. Back, if you go to the W before the run up, yep, that's that same pattern before the rip up.
Generally, you would like to see this to be a higher low. Now, on the line chart, was this a higher low? No, it wasn't. This was lower. So generally, the market would like to come back and check that area there. And you have this measured move down here as well. But this is not necessarily negative, as Hedron can literally stay sideways or move up slightly while Hex overperforms. I mean, this is starting to create market structure. If we get a higher low here somewhere, that would be perfect. Then you can make your next W. And when you have a break of this, off you go with this Hedron versus Hex.
I can reinforce that for sure.
Yeah, so this actually doesn't look bad. But that, yeah.
Yeah,
we'll
let me show you what I see. Yeah, let me show you what I see, which is the same chart. It's this is Hedron versus Hex. This is where the OA wall is, and that's significant because this is where people can convert Hex into Hedron and not incur slippage.
And that's a lot of support.
Correct. So if you don't know, in the early days of Hedron, the OA, which is like the master account of Hex, put in a thick band of liquidity, and that's what this is here. And this acted as resistance because it allowed people to sell that massive pump back down and take out massive profits into Hex. And it pushed the price of Hedron all the way from the top up here all the way down here for like a 99% drop. 97.5%. Okay.
It's pretty much what you saw now. Don't you want to do a fib extension on that quickly to see where Hedron might be going in the future? Like, remember you did that with Hex.
Yeah.
Because I know Thothchild has put on my one of my comments that he wants to see an extension on Hedron specifically.
On the Hex pair or the
USDC pair? That's the USDC pair.
I will. Okay. Yeah, I'll get to that in just a second.
Cool.
But I just want to point out that the way that I see this playing out is like this here. You're going to get a similar type of move here where there's going to be one more dip into the wall before going higher effectively. Like I think this is your Hex is about to run like crazy. And when it does, it's going to cause pain on Icosa and Hex. And it's going to give us a one more chance to accumulate Hedron and Hedron and Icosa inside of their lower pricings. And then that's going to be it. And then once Hex really moves, it's going to move quickly, push these prices down into here. And then when Hex pauses, that's when these are going to have their massive moves up against their Hex pairs.
Yeah, I mean, I won't even be surprised if it just holds above that OI wall. Like it looks like it's already respecting that quite a lot. And it's going to take a lot of selling to get it through that wall.
Yeah, I just don't see it. There, by the way, just FYI, there's no volume on this pair, but when you get down into the wall, there will be volume coming in on that pair. I was going to show you now. Oh yeah, I was going to take this fractal quick, and then we'll do that extension. So basically, if I take this fractal and I put it on the Icosa Hex Icosa pair, well, this is like basically the same play again. This is how I see this playing out. Is you're going to have this is Icosa versus
Double
Hex.
bottom, okay.
So you're basically going to do what a Hedron did, which is it's going to do a double bottom, yeah. And then you're going to come back up and re-grab that trend line and then act as support. And then you could even be targeting the 1618 up here at about an 81 X per Icosa. Right now it's at 17. So what is that? An increase of 380% against Hex. So you could actually end up getting a more Hex by getting exposure to Icosa or Hedron in this case. So I actually did a Hedron fib extension chart. I wonder if this is still in anymore. I don't know. I did it again. Oh shit. I think I deleted it. But it's not like we can't redo it. So Hedron is now, if you see this key uptrend that we broke down out of when we had that capitulation candle low, this is Hedron versus the dollar.
Mm-hmm.
And now it's coming up and testing the bottom of it. And so once this resistance breaks and AXiS support with a successful resumption, it's kind of going to be gas on the pedal for Hedron in my mind. Yeah, we might stumble here for a few days and maybe come back down and then go, or we might break right through. The way Hedron's been acting, I think it's ready, but no guarantees, I guess. So if we're going to do an extension on this, you want to go from the low to the high?
Yeah.
And then we'll come back down. Okay. This is
You could probably do it from the 97% dip, don't you think?
Yeah. I actually prefer doing retracement, the method, because it gives you a more clear.
Yeah. Because I mean, that's what Hex has now done. 97%.
Yeah. So your 1618 is up here at this key level here. And that's about 4 zeros and a 7. So the 700,000 level price target to get there would be 2,500% run. It would basically duplicate the run we had back here. So I wonder if you can get the price action to even look similar. Probably not, huh? But yeah, so that price action ain't gonna play out the same, but it's just cool. I mean, there's a lot of upside if you go to. So I'm gonna shout out. Look into Hedron.com. This is made by Crypto Sloth. We do a lot of content together. He actually has a calculator on here that can calculate what the ceiling price would be or what Hedron would be at, like a discount relative to Hex, because both Hex and Hedron are tied to the T-share rate, so you can measure their respective ceiling price of Hedron against the Hex price and share rate. So if Hex is 5 cents and the T-share rate's 26,000, let's say, it's roughly just short of that right now. I think it's like 25,800. Calculate. It's saying that the ceiling price is four zeros and a 7, right? So then that's actually lines up with our target of the 1618. Yeah. And so technically, one way to look at this is Hedron typically trades 90% off or lower. So it never can quite breach the 10% valuation of what it should be at the ceiling price. And I think a lot of that you can attribute to all of the massive minting bonuses from the early days of the contract. But as those minting bonuses fall off, it's more and more likely that that Hedron will start to track more of a less of a discount. So if we're just doing a conservative estimate, 50% off on a massive rip up would be 4038. That would be like a 50% off, which it's never gotten that high. Even at both peaks, when it peaked both times on the Hedron chart here and here, it was still only, I think when it was at its first peak here, it was about 7% from the ceiling price, and here it was about 10% from the ceiling price. So it's never really even tested, 15, 20, or 25%, of what the ceiling price is. And if it were to do it, now that a lot of these minting bonuses have been dumped here and here, chances of the inflation rate decreasing is pretty high. And you can go into hexmodel.com and actually track the amount of hedron that's being burned versus the inflation rate. And again, if you want to see any of these tools, I got a resource page that has links to all these tools. But you can see here that inflation in hedron is just kind of steadily climbing at a pretty much a basic static rate. But burning had slowed down for a short period, but now burning is picking back up. So this is a supply difference of about 9.2 trillion hedron burned out of the total supply. It's a little it's like about 12% or 13%.
Yeah.
And so that has made it easier for hedron to go catch higher valuations in X terms. So let's be conservative, and instead of 50%, let's just say we get the 75% off number. That's 4019. Go to get our 4019. Shit, that's right up here around that 1.272 level, and that would actually coincide with confluence at the top of this band, which was your top here. Oh, so that was your significance. Maybe you're going in for a double top on that level. So something to think about.
Yeah, that works out perfectly, actually.
So this is like probably a good place to start to wrap up. Maybe we got one or two more charts. We'll talk about the Fed funds rate and stablecoin dominance, and then start to wrap up a little bit. If you've enjoyed any of this content, make sure you follow HANSHEX on Twitter. And then if you want more detailed analysis, please go to my website, or you can come check out my stream with Cosmo Jenkins tomorrow. We'll be doing another technical analysis session at 3 Eastern, and then Friday I'll be doing a technical analysis session with Dixon Piper. So we got some more good analysis and TA coming up. But yeah, I'm gonna put it over to you, and we can look at some Fed funds rates and try to explain.
Yeah, we talked about this before the stream, and we can see now this is the chart of the 2-year yield. Let me just remove the halvening over there. Yeah, we've both talked about this flat area where this is called the phase 2 of the pivot, right? The first phase is slowing of the interest rates, then the phase 2 is the pause, and phase 3 finally the reducing the rates, right? Now the 2-year yield, I've got the differences here. You see that when the 2-year tops out, it topped out. We won't use that one. It topped out at 7.7. The interest rate got all the way to 6%. You can see the interest rate on the left here and the 2-year yield on the right, the percentages. So you got all the way up to 7.7, and the difference there is always positive. So they never raise rates higher than what the 2-year has paid. And now currently we're sitting at 4.75, the most recent one, and it topped out at 4.884. So the difference there is, you can see, 0.13. That means that if this fund rate doesn't go up for the first time in the history of this chart data that we have, they will be exceeding what the 2-year yield pays, which I doubt will happen, because that would just be the break of this trend. It's not impossible, right? Yeah, and I'm just interested to know what you might be thinking of that.
And it makes sense to me. And the reason why this is important for everyone to know is every economist on earth is saying that we're heading into a recession, and that there's a big crash coming. And the markets always tend to do the opposite of what the herd says. And so what Hans is trying to bring light to is that what's coming is the potential pause before a pivot on rates. And that's significant because when the Federal Reserve decides to pause rates, they're waiting for more data to come in before they decide that they've broken something in the economy and they need to drop the price of money, meaning borrowable money. So when money gets cheaper, it gives people an opportunity to get more leverage in an asset because they can borrow cheap money and then they can apply it to buy an asset. So the thinking here is that over time, on those pauses, that you have like this 3 to 7 month window where it's like the last call before the big crash. So people might be right about the crash and that it's coming. And like what Hans is trying to point out is that according to this statistic here that he found, it's close that within the next 2 to 3 months that the Fed will start to decide to make policy changes in the interest rates, which can affect the larger markets. But I think we both think that what's going to happen before that is more risk on and more crazy upside max pain scenario before something breaks in the economy, and that's when they decide to pivot on rates, which will then eventually bring that crash. And then the old famous saying goes, sell away, go away in May or whatever.
Yeah, and as you said, max pain in this situation is the price continuing to the upside, right, for most of the risk assets, because most people, I would say, has been left behind, right?
Yeah, I think so. I think everyone was. I think at the bottom on Bitcoin, like a month ago, the shorts were nine shorts to every long, and whenever the market gets that imbalanced, it usually tends to do the opposite, and that's exactly what it did.
I've got this. Maybe we can finish with this. This is the Bitcoin dominance without the stable coins. Just put on the candlesticks.
Nice.
BTC divided by crypto cap, total divided by USDT, divided by total minus USDC minus Tether. So you can actually multiply this by 100 still, but we'll just take it at 48%. And we can see, I mean, this is a perfect uptrend, right? This would just mean now we've gotten this nice pullback recently, and we've seen the altcoins and obviously HEX performing pretty well. And if you put HEX over this chart, you'll see that HEX does perform pretty well during the decline in the dominance, right? That it's definitely, I wouldn't go out and say that it's correlated with this, but this is definitely still an uptrend. So the altcoins suffering against BTC, we've now retested this trend line, and I expect more upside, right? So this would mean either Bitcoin overperforms or going down in value pretty quickly, because this wants to reverse to the upside. Or if we get the break of the trend, then the altcoins are ready to run again. We're pretty oversold. Not really. It can go a lot lower. But yeah.
I see that on that RSI. That's cool. Yeah, I never really thought to take out the stable coins before. That's
because they're constantly increasing, right? And technically that's bullish. More altcoins coming into the market.
I agree.
Yeah.
I'll pull up
there's
my
the formula there.
Thanks for sharing that, man. I'm gonna add that to my repertoire.
Because many people they'll look at the USDC dominance or the USDT dominance. This one over here, this is the USDT, and we can see this. I mean, bullish divergence is down here. So this is the amount of stable coins sitting on the sideline. So the higher this goes, more stable coins are on the sidelines, which would mean people are taking profits. And we can just see, I mean, this bullish divergence is scary. It does look like the market wants to reverse here. And if we look at the USDC dominance, it has a little bit less market share. I mean, the same here, massive bearish divergences or bullish divergences, which would mean a reversal, right? So money coming out of Bitcoin and This is on the daily chart.
What's your stablecoin that you got up right here? Tether?
This is USDC.D, so the market cap
Gotcha.
dominance of USDC. And the USDT, I think, is more relevant because this has 4% market share, and Tether still is the dominant one.
I want to show you. I want to show you like my breakdown here on this quick. Tell me what you think of this. So this is my stablecoin index. It's basically USDC, USDT, and DAI in an index, and you can see that it's made this massive parabola up during the last since 2019. This is bullish for cryptocurrency because this means more dollars are being converted into digital dollars. However, we most recently had a giant break of this rising wedge or this ascending triangle, which tells me that the market really doesn't know what's going on. And so there's two ways to look at this, and I have it highlighted here with the blue circle, which is that this becomes like a rising wedge that goes up and tests this bottom of this triangle, where like it's basically a fake out where Bitcoin and Ethereum dump into whatever kind of macro pressures are coming up for the next. This is a 3-day chart, so maybe the next 2 weeks to 3 weeks, and then you have this test. If this test fails, bull market's on. Risk is really on for crypto, and you're going to get that max pain scenario, basically. However, we could already be there where there's just too much pressure on it, and it just goes into a bear flag here and then breaks right down. So it's kind of, that's what happened here off that high. So, but here's the difference is that this was just a straight up, straight down in 2020 during the beginning of the bull market versus here, which is where you actually consolidated for an extended period of time, kind of created a cup and handle, a weird W cup and handle thing, and then it just rolled right over.
It actually broke out and then failed on that W.
Yeah, here, yep. And that was, and so we were all over this in December in the private chart sets, just talking about how this was.
And you can obviously see what happened after that. I mean, we've got massive risk on in the last few months, 2 months.
I guess like bearish outcomes here would be like, so your divergence plays out, stable coins come back up to test.
Possibly, because this is still the daily. It's short term, right?
3-day, yep.
No, my divergence was on the 1 day, so it's a short term. So definitely yours is pretty much possible. Just the retest and then the breakdown, which would be bullish as people flee their altcoin or stablecoin positions into risk assets.
Yeah, and I kind of see that going, and then basically you get this chop sideways, basically with chop down and create more of a new parabola, and then we'll come back up in May, like let's say May, June, July time out here. That's when you're going to come up and rip to new all-time highs, because that's when the market will get really bearish, and the opportunity will be in stablecoin providers to produce new crypto money, new digital dollars, and increase the dominance of those cryptos, those digital dollars, and then that'll be money that'll come in to create the true floor.
That muddies the water a little bit, the continued printing of these more stable coins being minted, so gaining more dominance. So that does complicate it a little bit, which might make the analysis not that accurate, but
true.
The more stable coins come in, it should be bullish.
Yeah. Overall, like long term, this is, see how this this parabola
and it's going to continue over time with the CBDCs if they are to be stable coins.
This is the linear chart. It looks way more
stable coins. It's incredible.
Yeah, we're not that far off testing this bottom of this parabola. You're basically looking for a 12% drop in stablecoin dominance, and then that's where you have to worry, because then it's like, okay, if the most bearish thing that can happen actually for all of crypto is that this breaks down and all digital dollars disappear. So there's no way to hedge risk in CBDCs, or I mean CBDCs comes along, and that all these other versions of stable coins kind of disappear somehow. Not likely to happen. What's this is probably going to end up being a long-term sideways range until you get either a break of new coins coming in, or the regular crypto market just rips so hard that this dominance falls. And so that's why it's kind of muddied water, is because you don't know which of those two variables is impacting this chart up and down. All right, guys. Well, I think we're going to wrap this one up here. Next time we do this, Hans and I I'm going to be streaming off a different platform, and maybe I'll go on to Hans's stream next time. He uses like a higher quality app that I'm trying to actually look into for myself so that we can stream in 1080p. And so look out for that in the coming weeks. Maybe we'll do it like end of the month or coming into next month if you're on board for that.
Yeah,
And
I'm
yeah, I
always
mean,
available. I've got
I
a
just
lot of
really
time.
appreciate you, man. I've been watching your
Yeah,
TA
thanks a
and
lot, dude.
it's really good, man. I really appreciate it, and I'm sure the community appreciates it. So just
Yeah, we're probably the most similar streamers than most out there.
yeah, man. I'll bring that down, and we'll I don't know. I missed all of the chat this whole time, but I hope you guys got value out of this. If you want to see more, come back tomorrow at 3 p.m. Eastern for my stream with Cosmo Jenkins. And Hans, thank you, sir. Appreciate you,
Thank you
brother.
very much, AXiS.
All right, man.
See you
Any
guys
last words?
next time, eh?
Yes, sir.
Yeah, remember, always play from a position of strength and don't get wrecked. Please don't get wrecked.
Don't get wrecked, boys and girls. All right. Peace out, guys.
Cheers, guys.